Hello and welcome. You're watching Your Trades. I'm Kavita Thapliyal. With me is my colleague Mansi Dave. And Mansi, what a start to the week. We can say the market ends above 24,600 and definitely almost all sector packs, almost all sector indices in green except for pharma and FMCG slightly.
Absolutely, Kavita. It was a great start to the week, a strong one with the benchmarks doing positive rounds, the broader markets showing signs of gains, as well as the sector-specific and stock-specific approaches for the market really well. 24,600 and above is where we closed, around 200 points of upsurge in Nifty. Also, Bank Nifty did see a lot of volatility during the session, but at least managed to close in the greens, 54,000 and above, around 350 points of an upsurge while we were closing. Taking a look at the mid-cap and small-cap indices, the mid-cap was doing really good in the trading session, and we did see a good amount of upsurge during the entire session while we were closing a whopping 1,000 points upsurge, 56,825. You would find real good opportunities in mid-cap basket during the session. Sector-specific mid-cap players, be it the IT, the FMCG, the automobile mid-cap companies were doing really good, on the back of which the index was also performing. Nifty IT was the outperformer, and if we take a look at the larger players which were contributing to this rally in the session, it was M&M, Infosys, ICICI Bank, Bajaj Auto, Axis Bank. On the flip side, it was ITC, Sun Pharma, Reliance, HUL, Divis Laboratories, which were on the negative, the laggards for this trading session. Barring pharma and FMCG, literally all the sectors were doing good during the session. And so now, what should be your strategy for the day next is what we have to watch out for. For the same, we have with us market expert Lakshmikant Shukla. Lakshmikant, thank you so much for giving your time to ET Now. It's a pleasure talking to you. Yes, it is going to be the first one such of an expiry for Nifty after the change in the patterns, which we will see in the trading session next. So we are now going to call it an expiry day. Tell us what should be the strategy for the next session.
Hi, good afternoon to both of you. Yes, Nifty has rebounded after taking support from the psychological levels of 24,500, and after 5 days of decline, Nifty was able to surpass its prior day's high, so which is showing positive sentiment. But I think immediate resistance is also placed near these hurdle of 23,000, 24,700, where we have also seen bearish crossover of 120 DMA. So that would be the upcoming resistance level for the Nifty. If Nifty will able to surpass this hurdle, then after we could see further upside move toward the levels of 25,000. Otherwise, we will see some more consolidation with the strong support which we have found near the levels of 24,337. And as long as Nifty hold this level, we expect that Nifty will break the 24,700 level, and then after we will see 25,000 levels again. Bank Nifty also defended its key levels of 54,500, and then after it started moving on the higher side, and now we expect that it could extend this pullback move toward the levels of 54,800 to 55,400 on the upside, while on the downside the levels of 53,500 could act as the support. And if it reaches this support, then probably we could see that Bank Nifty could retest it 200 SMA levels, which is found near the levels of 52,900. So that is the levels of Nifty and Bank Nifty. But if we look at the sectorial indices, where we have seen significant amount of gain in Nifty Auto and Nifty Defense space, where both these indices has formed a positive candle, and Nifty Auto has surged higher. So we expect that in positive upside move in Nifty Defense as well as in Nifty Auto space.
Any specific recommendations or strategies over here, Lakshmikant?
See, we would like to recommend two stocks. First one is LTF. So this stock has seen minor correction from the higher levels. Then after in today's session, it has given falling channel breakout on the hourly chart. So we expect that positive momentum will continue in LTF toward the levels of 232, whereas stop loss is seen near the levels of 215. Second stock which we are looking on the buy side, that is HAL. So in Nifty, as I said, that we have seen a strong positive upside move in Nifty defense space with the formation of bullish candle. Even HAL has found respite near its 200 SMA with the formation of bullish candle. So from here on, we could expect this pullback move extend higher toward a target of 4,680, and whereas the stop loss is seen near the levels of 4,320.
All right, Mr. Shukla, thank you so much for all those picks. Let's go across to Srishti, who is ready with the charts of the day. Srishti, which are the stocks on your radar today?
Well, yes, we have got two counters to highlight for our viewers where we have spotted a breakout. And firstly, let's talk about Bajaj Autos, because that particular counter hasn't participated much in the rally of late, and especially the rally that we have seen in the auto counters. Look at the move in Hero MotoCorp, TVS, Eicher Motors. They have already had like such a good run up in the past couple of weeks, but Bajaj Auto did not participate much. And let's tell you what we are spotting on the technical front. So for today, we happen to see almost a 4% jump on this particular counter. But earlier, the stock has been facing resistance at its 8,900 odd rupees. But in today's trading session, the stock managed to retest those levels. That is one. But another thing is that the stock has taken a bounce from its 20-day moving average and managed to take that up move higher. So this is the first stock that we wish to highlight on the breakout side. We're moving on to the next one, and that is Manappuram Finance. This particular counter has been one of the strong candidates in the markets, did not participate much in the volatility. But today's trading session, we have seen almost a 5% jump, and the stock was actually consolidating for quite some time now. Managed to retrace back a little lower to 250 odd levels, but once again seemed to be inching higher. For the past 4 trading sessions, the stock was under a bit of a pressure, but today managed to take a bounce from its 20-day moving average. A bit of a long build-up is what we have seen on the derivative side, and hence we managed to spot this as the other breakout stocks. So these are the 2 stocks for today. Back to you.
All right, Srishti, thank you so much for those 2 list of stocks. So with this, it's time to take a very quick break. After the break, a lot coming up. Welcome back after the break, and it's that time of the month again where the auto companies shares their monthly dispatch data. Bajaj Auto and Escorts Kubota have exceeded expectations this time. Let's go across to my colleague Srishti for the complete details of auto numbers this time.
Well, good set of numbers have been recorded for majority of the companies in the month gone by when it comes to the auto sales data. Select companies within the two-wheeler pack and even the tractor division has managed to done better versus what the street was penciling in. Now let's talk numbers then, and firstly from the two-wheeler side itself, it was Royal Enfield which has done fairly better. About 1 lakhs of unit is what the company has clocked in, but that was in line with the street estimates. But a real outperformance is what we have seen from Bajaj Auto as well as TVS Motors as well. Bajaj Auto clocked in a sales of 4.2 lakhs of unit versus our estimate of 4 lakhs. Other than that, it was TVS Motors that managed to achieve that milestone figure of 5 lakhs of units. But on the rear side, they continue to believe that it could be a bit troublesome in the medium term. But when it comes to the tractor division, there too we have seen numbers better than what the street was penciling in. Case in point being Escorts, that has done fairly better. And even for Mahindra & Mahindra tractor division, the company clocked in a sales of over 28,000 of units versus our estimate of 24,000 of units. Now when it comes to the passenger vehicle side, here in Maruti Suzuki numbers were in line, and so was the case for Tata Motors passenger vehicle division. Numbers were a tad bit better, but M&M Automotive division, there was a bit of a disappointment. But the company has come out with a clarification saying that what all will be decided in the GST rate rationalization meeting, they will welcome that. But before that, they have taken a judicious call where they have held back to some of the vehicles to be dispatched to the dealers in anticipation that there will be some bit of a changes in the GST, and once they have that clarity, then they will once again resume those vehicles to the dealership. And lastly, from the commercial vehicle side, the numbers were absolutely in line from the case of Tata Motors commercial vehicle Ashok Leyland, and was for the similar case for Eicher Motors VECV as well. So all in all, good set of numbers coming in from August auto sales data. But yes, the biggest trigger, or rather the next trigger, will be the GST rate rationalization meeting. So all eyes on that.
Let's also hear some words of wisdom on auto sector. Ajay Srivastava, CEO Dimensions Corporate Financial Services, is bullish on auto sector. He likes two-wheeler space within autos and believes the sector has good ecosystem. Let's listen in what he had to say.
We are invested in autos at the end of the day, and we are very bullish about autos for the simple reason that autos have finally opened, at least the two-wheelers have opened, and including the car companies, opened up a big market for exports. So while we just focus ourselves on domestic, if you see the export numbers, they are growing much faster than the domestic numbers, and they will become significant in 2 to 3 years' time. Our supply chains are very good. We are very, very confident. Our manufacturing capabilities is very strong. Our brands, we may copy some of them, of course, but they're pretty strong in the market. At the end of the day, they're competing. An Indian auto company competes so well with every global major in this country. So all in all, this is a segment ecosystem where the story is strong, not because just the company is strong, but because the infrastructure, there are thousands of ancillaries which are good quality supply chains. We have just created an ecosystem for auto, I think, which is second to none. And I think given the focus on exports now and with rupee at 88 plus, and if you do a forward cover, it will be 91 plus for the next year. That's a hell of a lot of money to make in the export market. So our bullishness stems from ecosystem, strength of brand, strength of companies. All companies are debt-free. Amazing industry. All companies are debt-free. Exports are growing robustly. So don't worry about domestic alone. They will make up their money from exports, and at 91 rupees forward cover, when you are asking for serious money rolling in. So auto, we remain bullish.
After auto, let's shift focus to tech stocks, which was zooming in trade today. What are the factors that aided the sectors? My colleague Sharad is joining with the complete details why IT stocks were actually up in trade.
Well, interestingly, we had pointed out 2 weeks ago that there was a divergence in the IT stocks and Nasdaq, and there was a scope for up move in IT. And today we are seeing that up move happening. Interestingly, short covering is seen in certain counters as we are speaking with the dealers, and Fed has signaled a rate cut in the month of September, which will actually help the companies decide their budgets. Now, what happens is largely service export-based IT companies are largely to benefit as more clarity comes on the order flows coming in from the American markets. Now, even the valuations, if you look at it, they are near their 5-year average levels, and AI acquisitions and tie-ups are also being announced. Interestingly, Indian IT companies are announcing expansions or acquisitions in the non-US markets as well. Now, let's look at which other stocks where the analysts are most bullish on, and these include TCS with almost a 19% 12-month target return likely, with Infosys also coming to the pack of 16% growth, and HCL Tech Coforge. Also, we are seeing an expectation going in double digits. If we take other names such as Mphasis, Persistent Systems, and LTI Mindtree, the range goes between 5 to 14%. We checked with the valuations also. Of course, the large caps and the mid caps. Of course, the mid caps ones are on the higher side. But net, if you look at it, TCS Tech Mahindra, they have below the 25 times. Of course, some valuations have turned attractive, but the industry or the market will be looking at some more positive fundamental triggers, as well as earnings is still 1 month away.
Thanks, Sharad, for that perspective. With this, it's time to move to my colleague Rabinder, who is ready with the list of stocks which were buzzing in the trade. Rabinder, over to you.
Wellness is in focus where Zydus Wellness units by UK-based Comfort Click for 239 million Great Britain pound, and it's a high margin space, and company has a plan to increase the global footprint by with entry in the developed markets like UK and Europe. Apart from this, Premier Energy is also in the focus in today's trading session, where company's subsidiary has received 2,703 work order from the both new and existing customer. Moving to next, CG Power is also in the focus on the back of brokerage note, where Morgan Stanley has come come out with a note and they have initiated coverage with overweight rating with target price of rupees 799. They say that the company is India's manufacturing proxy, and the company has a strong presence in manufacturing and is a beneficiary of strong growth and in power system. Apart from this, emphasis is also in the focus where Morgan Stanley has come out with a note and they have maintained their overweight rating and they have hiked target price of rupees 3,625 as compared to earlier target price of rupees 3,500. And lastly, Aditya Birla Fashion and Retails is also in the focus where Kumar Mangalam Birla in the 18 AGM of the company has said that with the demerger completed and fresh capital in place, company has entered a new phase, one focus on organic growth and sustainable profitability, and management has aimed to EBITDA margin expansion of 300 basis points over next 5 years. The management also said that over 250 stores are already in the pipeline for FY26. So back of this positive commentary, ABFRL is also in the focus.
Thanks, Ravinder. Let's move on and talk about the brokerage firm Nuvama, which has come up with portfolio changes in IT sector and BFSI. My colleague Ashesha is here with more updates.
Well, yes, Nuvama has made some changes to their India portfolio. First up, they've downgraded the BFSI sector to underweight versus their earlier overweight rating. Now they're saying that concerns are now shifting from growth to asset quality. They also say normalization of credit costs itself is likely to weigh meaningfully on the profitability of the BFSI sector going forward. But within the BFSI sector, they continue to remain selective. So they say that they still like the top 2 private banking and insurance companies within the entire BFSI basket. They've also made some changes to the IT sector where they've now upgraded the IT sector. They have an overweight rating now versus underweight rating earlier. They say that the sector underperformance in 2025 has now compressed relative valuation. So they are now very bullish when it comes to the IT sector, and hence they have upgraded the entire sector. They've also changed their rating for Reliance Industries after the kind of outcome we got from AGM last week, where they've upgraded Reliance to overweight from neutral, and now they're seeing value unlocking potential as far as Reliance is concerned, especially with the kind of announcement from their Jio retail arm, Jio listing in the first half of the calendar year as well. As far as other sector outlook is concerned, they continue to remain overweight on consumer, telecom, internet, cement, IT, pharma and chemical sectors, but they continue to remain underweight on BFSI, industrials, power and auto. So they have downgraded BFSI and upgraded IT. These are the 2 major changes that they've done to their India portfolio.
Thanks, Ashesha. And let's talk about silver, which is making into news as silver prices are near 14-year high. Let's go across to Sharat, who gives us all the updates why there is a boost in silver demand.
Well, as the silver prices are at their 14-year high levels and silver is sparkling, the COMEX levels, it has gone past the $40 per ounce mark. Also, it's expected that the September Fed rate cut will actually fuel a much more rally in the silver prices. Also, the safe haven demand, that's expected to continue as what we have seen in the gold prices as well. But what's new this time? There's 2 important institutional moves, which is very important. USA has added silver to its critical mineral lists, and even Saudi Central Bank, they have started buying silver ETFs for the first time. Interestingly, there are important triggers also for silver, and this is just not a safe haven demand metal, but a very important use case in industrial space, especially in EV, data center, PV and semiconductor as well. Now, Indian festive season also, higher gold prices might actually deter and make individuals move towards the silver as well as LGDs. Now, the shining gains, we have taken it on a quarter basis. Dollar returns, look at the numbers. It's been even Stevens for the first 2 quarters, but the entire change is happening in the 3rd quarter currently, which we are in. 9% dollar returns for silver, while for gold, it is just 3%. Also, the exposure, where does it lie for the silver? This is, of course, there for Hindustan Zinc. The stock is having a gala time, so almost 4 to 5% up in the trade. Also, minimal exposure for NMDC, Vedanta as well, and jewelry stocks also, as they also have exposure in the silver space. Also, there are key silver ETFs in India where exposure can be taken by retail. These names include ABSL, DSP, ICICI, Pru, Nippon, who have at least 3-year history as well. And overall, let's just look at how the performance has actually panned out. The equity thematic PSU has given a 29% return, and silver ETF outperforming gold ETF as well as hybrid multi-asset coming in at almost 26% CAGR over the next 3 years. And analysts state that there might be more rally coming up in the silver space.
So silver is definitely making news, but which are the cues which you should watch out for tomorrow's trade? My colleague Snehi is joining just for that. Snehi, over to you.
Well, there's lots of cues to watch out for, and the biggest one of them is going to be watching out for the weekly Nifty expiry now happening on Tuesday. So that is going to be the biggest trigger for the Indian market. Other than that, globally from the US, you have ISM manufacturing and S&P global manufacturing PMI numbers coming out. From Eurozone, all eyes are going to be on their inflation print, their CPI numbers as well. But shifting focus back home in terms of corporate action, board meetings, you'll have JSW Cement Q1 earnings will be declared. So watch out for JSW Cement as well. Deepak Fertilizers, Gabriel India and GNFC will be trading ex-dividend, and it's going to be the last day to buy shares of Concord Biotech and Prestige Estates in case you wish to be eligible for their dividend record date. In terms of annual general meetings, watch out for Gillette India, Hindalco as well as Just Style. And lastly, in terms of some other events, watch out for Airbus, because Airbus workers in the UK are expected to begin their 10-day strike. And also we understand from reports that Apple is all set to open its first Bangalore store in Hebal, and that outlet is going to be called Apple Hebal. So watch out for all of these developments and all of these cues to track, all of them very important to keep a close eye on.
All right, so a lot of cues to watch out for Tuesday's trade. With this, it's time for a wrap in this edition of Your Trades. Keep watching ET Now.